Welcome to Edison TV. I'm Catherine Thompson, Technology Analyst at Edison, and I'm here today with Hans-Petter Mellerud, CEO of Zalaris. Zalaris is a Norwegian headquartered and listed provider of HR and payroll solutions operating across 18 countries in Europe and Asia Pacific. Welcome, Hans-Petter.
Thank you so much, Catherine.
Just to kick off, do you think you could remind our viewers with a brief overview of Zalaris?
Yeah, I think you touched on it. Zalaris is a European provider of global payroll and HR outsourcing and consulting services. We deliver services on our cloud-based PeopleHub platform, which is powered by SAP SuccessFactors and S/4HANA, and combined with business process outsourcing or BPO delivery. Today, approximately 80% of our revenue comes from recurring managed services, serving more than 400,000 employees across Europe and globally. Our largest customer has about, in terms of geography, 48 countries covered with about 16,000 employees. Our model is built on compliance expertise, scalable delivery, and multi-country payroll capability, positioning us as a trusted partner for complex payroll and HR environments. And our consulting unit is focusing on helping customers implement SAP human capital management and payroll solutions across the globe.
Thanks. You just reported your 2025 results. Do you think you could talk us through the highlights?
Yeah, 2025 was another year of profitable growth. Revenue reached slightly above 1.5 billion Norwegian kroner, up to 12% organically. Adjusted EBIT increased to 194 million, with a margin of 12.9% for the year. And managed services delivered 15% growth or recurring revenue growth and a strong 22% margin in Q4. Operating cash flow was good at 162 million or 162.5 million for the year, and also really good in the quarter. And our board proposes a 2.5 Norwegian kroner dividend to be paid out after our general assembly. So in the quarter, we strengthened our recurring revenue base. We improved margins and generated solid cash flow while continuing to invest in AI and platform scalability.
You recently opened an office in the Netherlands to serve the Benelux region. Could you talk me through your geographic expansion plans and give us an update on the performance of the Asia-Pac business, which I think was set up in the last few years?
Our strategy is disciplined expansion in markets where we can leverage existing platform and our expertise and shared services at scale. And as we've communicated to the market, we're really strong in the Northern Europe and APAC, but we're focusing now on covering G20 countries and basically all the Western European countries with own delivery capability to further increase win rates of multi-country payroll deals. So in Asia Pacific, in 25, in the Q4, we had some operational adjustments. Performance was below our expectations in consulting, and we have taken corrective actions, including capacity alignment and tighter margin discipline. And we expect a gradual normalization now during Q1. And having said that, we started APAC based out of Australia for a couple of years ago and have seen a truly fabulous growth there. But as said, we had some overruns or substantial overruns on the project now in Q4. That's more of a one-off nature, and we expect to be back on track in Q1. Our focus in terms of further geographic expansion is, as mentioned, we're focusing on the G20 and Western European countries and focusing on a strong execution rather than an aggressive geographic risk-taking.
Great. And Perceived potential for AI to reduce demand and possibly pricing for SaaS software has recently hit the share prices of many software companies. Considering that you provide both a combination of software and services, how do you expect AI to affect your business?
Yeah, that's a question that I'm being asked a lot now from investors. And we see AI as a structural margin and competitiveness enhancer, not a threat to our model. Payroll and HR outsourcing are highly regulated and complex, and while AI improves automation, it does not eliminate the need for compliance oversight and domain expertise. Instead, it enhances productivity, reduces manual work, and shortens implementation timelines and improves quality. We have a number of projects in place and are truly enthusiastic. Frankly, I've never seen as much enthusiasm ever in our organization in terms of implementing new solutions based on AI, and we have some truly fabulous use cases where we, for example, have rolled out new applications to customers in a number of weeks that otherwise would take months, and been able to analyze complex data in days that also otherwise has taken us weeks to do. So for us, we see AI as an enabler to further digitization and to the real power to further do the productivity improvements that we are targeting for this year and the years to come. And we also believe that our shared services model allows us to scale our AI investments across our entire customer base, and this strengthens our competitive position and supports our long-term margin expansions.
Could you remind us of your long-term financial targets and how you expect to achieve them in both your managed services and consulting businesses?
Yeah, so our ambition is to sustainably deliver 13 to 58% EBIT margins with the continued organic growth driven primarily by managed services. Managed services target growth is, we have set that to 15%, whilst consulting is quite some lower at 5%. And with that, managed services is our structural growth engine supported by strong retention and upsell potential. Consulting remains strategically important as a land and expand channel, but we are focused on improving its profitability and somewhat volatile profile. Having said that, more than also 55% of the revenue in consulting is also either recurring or reoccurring type of nature with annual renewals of application maintenance services. Over the next 3 years, we target approximately 10% annual productivity improvement driven by digitalization and AI. Combined with operating leverage in the recurring revenue, this supports our margin expansion. And we believe that achieving then annual 10% annual productivity improvement should also potentially take us well above the 13 to 15% target EBIT margin. So in summary, we are growing recurring revenue, we improve productivity, and through AI, we will continue also scaling profitably over the next years.
Sounds great. Thanks, Hans-Petter.
Thank you as well, Catherine.